Imagine this. You are a retired homeowner. You worked your whole life. You paid off your house. And last year, you finally sold it. The sale went smoothly. You moved into a smaller place. You thought everything was taken care of. Then one morning, you open your mailbox. Inside is a letter from the Internal Revenue Service. It says you owe over $40,000 in taxes. On a home sale you thought was tax-free. Your hands start shaking, your heart starts racing. You think there must be a mistake, but the IRS does not think it is a mistake. Their computers flagged your return. Or more accurately, they flagged what was missing from your return. And now, the burden is on you to prove you do not owe that money. This is not a rare scenario. This is happening right now to thousands of senior homeowners. And the deadline that triggers it all is tomorrow, April 15th, 2026. I am Faria. I am a Senior Policy Analyst and retirement finance expert, and I have spent years helping retirees understand the complicated rules that the government does not make easy to follow. Today, I am going to walk you through exactly what the IRS is looking for from senior homeowners this tax season. I am going to explain the rules in plain English. No legal jargon, no confusion. I will show you the specific traps that catch seniors every single year. I will show you the protections the law gives you that most people never use, and I will give you 3 clear steps to protect yourself before it is too late. But I need you to stay with me until the very end of this video, because there is a brand new tax deduction for seniors in 2026 that could save you up to $6,000, and most people have no idea it even exists. If you miss it, you will not get that money back unless you file an amended return. So please, stay with me. This information could save you thousands. Let me tell you about Robert. Robert is 68 years old. He retired 3 years ago from a manufacturing company in Ohio. He receives Social Security every month. He has a small pension. And for 31 years, he and his late wife, Carol, owned a 3-bedroom house in a quiet neighborhood outside of Columbus. Carol passed away in early 2024. After a difficult year of grieving, Robert decided it was time to sell the house. It was too big for one person. Too many memories. Too many stairs. In the spring of 2025, Robert sold the home for $410,000. He had originally purchased it for $140,000, so his gain was roughly $270,000. Now Robert had heard from a friend at church that seniors do not have to pay taxes on the sale of their home. He remembered something about a special exemption for people over 55. So Robert did not report the sale on his tax return. He figured he was covered. He filed his return using just his Social Security income and his small pension. Simple, clean, done. 7 months later, Robert received an IRS CP 2000 notice. The IRS said Robert had unreported income of $410,000. The proposed tax bill was over $43,000, plus interest, plus penalties. Robert panicked. He called his daughter. She called a tax preparer. And here is what they discovered. Robert made not one, but 3 critical mistakes. First, the special over 55 exemption Robert remembered? It was repealed in 1997. It has not existed for almost 30 years. Second, Robert did qualify for the $250,000 home sale exclusion under current law. But because his gain was $270,000, he still owed capital gains tax on the $20,000 above the exclusion limit. And third, the closing company had sent a Form 1099-S to the IRS showing the full sale price. When Robert's tax return showed nothing about a home sale, the IRS computers automatically flagged the mismatch, and the IRS proposed taxes on the entire sale amount. Robert eventually got it sorted out, but it cost him $800 in tax preparation fees, months of stress, and he still owed taxes and penalties on that $20,000 he never planned for. Robert's story is not unusual. It is one of the most common mistakes seniors make every single year. Let me make sure it does not happen to you. All right, let us go through the facts, step by step, straight from official IRS documents. Fact number 1. The April 15th deadline is real, and it applies to you. Tomorrow, April 15th, 2026, is the federal deadline to file your 2025 income tax return. If you are a senior, you can file using Form 1040 SR, which is the special tax form designed for people age 65 and older. It has larger print, easier layout, and it was created specifically with seniors in mind. If you cannot file by tomorrow, you can request an automatic 6-month extension using Form 4868. That gives you until October 15th. But here is the critical part. The extension only gives you more time to file. It does not give you more time to pay. If you owe money, you must still pay by April 15th, or you will face penalties. Fact number 2. Just because you are retired does not mean you are off the hook. Many seniors believe that if their only income is Social Security, they do not need to file a tax return. And for some, that is true. But the filing thresholds are lower than most people think. According to IRS Publication 554, the tax guide for seniors, here are the income levels at which you must file for tax year 2025. If you are single and 65 or older, you must file if your gross income was at least $17,750. If you are head of household and 65 or older, the threshold is $25,625. If you are married filing jointly and one spouse is 65 or older, the threshold is $33,100. If both spouses are 65 or older, it is $34,700. And here is what catches people off guard. Gross income includes gains from the sale of your home, even if the gain is excludable. It includes rental income, pension distributions, and in some cases, a portion of your Social Security benefits. So if you sold a home, withdrew money from a retirement account, or earned rental income last year, you very likely need to file, even if you have not filed in years. Fact number 3. The home sale exclusion is powerful, but you must claim it correctly. Under Section 121 of the Internal Revenue Code, if you sell your main home, you may be able to exclude up to $250,000 of gain from your taxable income. If you are married and file jointly, that exclusion doubles to $500,000. To qualify, you must pass 2 tests. The ownership test, meaning you owned the home for at least 2 of the last 5 years before the sale, and the use test, meaning you lived in the home as your main residence for at least 2 of those 5 years. Now here is the part most seniors miss. If the title company or closing agent issued a Form 1099-S for your home sale, you must report the sale on your tax return, even if your gain is completely covered by the exclusion, even if you owe 0 tax. You report it on Schedule D and Form 8949. If you do not, the IRS's automated matching system sees the 1099-S from the closing agent, but no matching entry on your return. That mismatch triggers a CP2000 notice, and the IRS will propose that the entire sale price is taxable income. That is exactly what happened to Robert, and it can easily happen to you. Fact number 4. There is no special capital gains exemption just for being a senior. I want to be very clear about this because it is one of the most persistent myths in retirement finance. Before 1997, there was a one-time capital gains exclusion for homeowners age 55 and older. But that rule was repealed almost 30 years ago. It no longer exists. Today, the $250,000 and $500,000 exclusion under Section 121 applies to all homeowners regardless of age. There is no additional exemption just because you are over 65. Everyone pays capital gains tax at the same rates. If your gain exceeds the exclusion, the overage is taxed. Period. Fact number 5. There is a brand new deduction that could save you up to $6,000. Now here is the good news, and this is the part I asked you to stay for. Under the One Big Beautiful Bill Act, which was signed into law on July 4, 2025, seniors age 65 and older can now claim an enhanced deduction of up to $6,000 per person. If you are married and both spouses are 65 or older, that is up to $12,000. This deduction is in addition to the regular standard deduction, and in addition to the existing additional standard deduction you already get for being over 65. It is available whether you itemize or take the standard deduction. But there is an income limit. The deduction begins to phase out if your modified adjusted gross income is over $75,000 for single filers or $150,000 for joint filers. You also need a valid work-authorized Social Security number to claim it. This deduction applies for tax years 2025 through 2028, so this is the very first year you can claim it. If you miss it, you would have to file an amended return using Form 1040X to go back and get that money. Do not leave it on the table. Fact number 6. Homeowners also benefit from the new SALT deduction cap increase. If you pay state income taxes and local property taxes, you should know that the SALT deduction cap has been raised from $10,000 all the way up to $40,000 for the 2025 tax year. This is a big deal for homeowners in states with high property taxes. It means if you itemize your deductions, you can now deduct significantly more of your state and local taxes than you could before. However, the $40,000 cap starts to shrink if your income exceeds $500,000. For most retirees, that will not be an issue. Fact number 7. The penalties for ignoring all of this are severe. If you do not file your return by April 15th and you owe taxes, the failure to file penalty is 5% of your unpaid tax for every month your return is late, up to a maximum of 25%. If your return is more than 60 days late, the minimum penalty is $525 or 100% of your unpaid tax, whichever is less. On top of that, there is a separate failure to pay penalty of 0.5% per month, plus interest that compounds daily, and if you never file at all, there is no statute of limitations. The IRS can come after you at any time. There is no expiration date on a return that was never filed. All right, now that you understand what the IRS is looking for, here is exactly what you need to do. 3 steps, simple, clear, starting today. Step 1. File your return or request an extension before midnight tomorrow. If your 2025 tax return is ready, file it now. If you are using Form 1040 SR, the senior-specific form, make sure your home sale, your pension income, your Social Security, and any rental income are all accounted for. If you are not ready to file, go to irs.gov right now and submit Form 4868 for a free automatic extension. That gives you until October 15, 2026 to file. You can also file this extension electronically through IRS Free File. It takes just a few minutes. But remember, if you owe any tax, you must still pay by April 15th. The extension is only for the paperwork, not for the payment. Even an estimated payment will help reduce your penalties significantly. Step 2. If you sold your home in 2025, report the sale, even if you owe nothing. Check your records. Did you receive a Form 1099-S from your title company or closing agent? If yes, you must report the sale on your return using Schedule D and Form 8949. Even if your entire gain falls within the $250,000 or $500,000 exclusion, if you do not report it, the IRS will flag the mismatch. You will receive a CP2000 notice, and you will have to prove, after the fact, that you qualified for the exclusion. That costs time, money, and a tremendous amount of stress. Report it now. Claim the exclusion properly, and close the book on it cleanly. If you are a surviving spouse who sold the family home within 2 years of your husband or wife's passing, you may still qualify for the full $500,000 exclusion. This is a protection many widows and widowers do not know about. Please consult IRS Publication 523 or speak with a tax preparer to make sure you get the full benefit. Step 3. Claim the new $6,000 Enhanced Senior Deduction. If you are 65 or older and your income is under the phase-out threshold, make sure this new deduction is on your return. Whether you are using tax software, a paid preparer, or a free program like AARP TaxAid or the IRS VITA and TCE programs, ask specifically about the enhanced deduction for seniors under the One Big Beautiful Bill Act. This is brand new for the 2025 tax year. Not every tax preparer will think to include it automatically. You may need to ask for it. If you have already filed your return and did not claim it, you can file Form 1040X, the amended return, to go back and add it. You could get up to $6,000 back, $12,000 for a married couple where both spouses qualify. And if you need free help filing, here are 2 resources. AARP Foundation. TaxAid offers free tax preparation at thousands of locations across the country. You can call 888-ARP now, that is 888-227-7669, or visit aarp.org TaxAid. The IRS VITA and TCE programs also offer free help for seniors age 60 and older. You can find your nearest site by visiting the IRS VITA locator online or by calling 800-906-9887. These services are free, they are staffed by trained volunteers, and they exist specifically to help seniors like you. Before I let you go, I need to say something important. The rules that affect your retirement, your taxes, your home, your Social Security, your Medicare, they change every year. Sometimes they change in the middle of the year, and the government does not send you a personal notification when they do. YouTube is a wonderful place to learn, but YouTube notifications are not reliable. They get buried. They get missed. The algorithm decides what you see and when you see it. And when it comes to your money and your home, you cannot afford to miss a critical update. That is why I am asking you to do one more thing today. Click the link in the description below this video and join the Global Senior Alerts official WhatsApp channel. It is completely free. When you join, you will be able to download a free copy of our Senior Benefits Protection Guide. That guide covers the rules you need to know for Social Security, pensions, Medicare, banking, insurance, and even airport travel. And going forward, you will receive real-time alerts whenever there is a rule change, a new deadline, or a government action that could affect your benefits or your finances. Directly on your phone, no algorithm, no guessing. You worked your entire life for what you have. You deserve to keep it. And you deserve to know the rules before someone uses those rules against you. If this video helped you, please hit the like button. It tells YouTube to show this video to more seniors who need this information. Share it with your spouse. Share it with your friends. Share it with your adult children so they can help their parents. And subscribe to this channel so you never miss another critical update. I am Faria. Thank you for trusting me with your time today. Now go protect what is yours. I will see you in the next one. Chat BR. Shom and Twi